Hello again, sorry something with the network. Okay, so this is Alice Lind from FinMax company and I welcome you today for our webinar devoted to several next candlestick patterns which are duck cloud cover and kicker. I would like you to put pluses again if you can hear me. Okay. So the importance of knowing the patterns in trading is pretty high. These patterns sometimes are the good entrance point. Sometimes they are telling us about the hesitation of the traders on the market, and they help us to understand whether it's better to open the trade or to wait for another opportunity to appear. When there is indecision, so of course it's pretty hard for us to determine whether we should open the trade. When we see the pattern that is pretty strong and that tells us that there is like good entrance point, we can enter the trade and we can make money on that pattern. Of course, the bigger the time frame, the more accurate they are. So sometimes it's important to pay attention to the time frame that you are trading. So I prefer to trade on like 1 hour, 4 hours time frame within one trading day. But these analysis candlestick patterns, it's much more accurate when it goes to 1 week trading, several days trading. Okay, so pay attention to that. So the second thing I wanted to devote my attention is whether it's enough to trade using the candlestick patterns. One of my traders asked me about that when we had like individual session. So I answered him and I wanted to share my opinion with you. So first of all, yes, if you know several patterns that are like good entrance point, of course you can trade only using that patterns. But such patterns as doji, they are more likely for us to show that there isn't that good opportunity to enter the trade. Well, basically the duck cloud cover is one of those indicators that are not that strong. And they are good when it deals to change in trend and when they appear at the end of the uptrend. So they are, if they appear in the bottom, of course, that's not the signal to enter the trade. That's not the signal to open something. But when you see that pattern at the uptrend, so it's the signal for the good turning point. So let's see how does the duck cloud cover look like, and let's see its description. So this is the bearish pattern, the bearish reversal pattern. So it's important to pay attention that the first candle should be bullish and the second should be bearish. What do we see here? First thing is that the closing price of the bullish candle should be lower than the opening price of the bearish candle. should be lower than the opening price of the bearish candle. So there should be a gap. The bearish candles should take at least 50%. It should close at least below 50% of the body of the bullish candle. So these two candles, they should be long. Pay attention to that. I'm switching to my platform as I have the trade that's gonna expire soon, so I need to understand what action to take. Okay, so and the candle that appears after that should be like the confirmation of the previous. Some analytics they say that it's better to wait for the second candle to appear after this one for us to get the confirmation that the trend has changed and we can trade for low. So right now we see that it's not some candlestick pattern. I have opened before the webinar. I have opened the trade. You see that right now euro is falling, and I will wait for the next candle to appear before I will open the second trade. So sorry. Okay, so let's come back to the dark cloud cover. We see that this pattern is reversal, and we see several important criteria for it. As I named, well, you see the description on the picture. First white candle or bullish candle, second bearish candle. Opening price of the second candle should be above the close price of the first candle. And the longer they are, the better, because the stronger the signal is. Also, the next candle that appears after the bearish, if it opens with a gap, there can be one reversal to the uptrend that was before. But if this second candle after our bearish will appear to be dark without any gaps, so it should be the confirmation candle. And within that day or within that time period that you're using, we can trade for low. Okay, so the second pattern that I wanted to mention is the kicker. Some analysts consider kicker to be one of the strongest signals on the market. Well, firstly, what does it show? It shows the severe change of the mood of investors. So if you see it on the market, it also has several significant features that you need to pay attention to. Of course, we see like that. We see here the downtrend, and the next candle that shows us the reversal should appear with the gap to the price of the, firstly, of course, to the price of the previous candle, and of course to the candle that goes before that candle. So the bigger the gap is, the stronger the signal is for reversal. Also, I wanted to point out that these patterns work basically well for both, for bullish and for bearish. So if you see it on the market, well, it's pretty good signal to enter the trade. As I mentioned before, a lot of analytics think it to be, and traders of course think it to be one of the strongest signals on the market that are showing the reversal. Well, firstly, the kicker, they show us the dramatic change in mood of the investors, of the traders, and it shows us that something occurred on the market that influenced so dramatically to the prices. Okay, so we can see that pattern on the market, like not that often, but when you see it, as I told before, that's the pretty good opportunity to enter. That's the good opportunity to open some trades. So let's make a short conclusion about the kickers. That there should be a gap. That's the first. The price should move opposite from the price that was on the previous candle. And basically it doesn't much matter what trend is up or down. When we see kicker, it tells us the dramatic change. It tells us that something going on the market. Sometimes really it can be caused by the fundamental factors. So if you see the kicker, you can check up for the news on the asset that you are trading. Kicker appear both on the currencies, they appear on commodities, on stocks. So if you're trading, let's say, on stocks and you see the kicker, it means that something has happened with the price for this asset, and that's pretty good. That's pretty good moment to catch the wave and to enter the trade for making some profit, for making some money. So 2 patterns for today, like dark cloud cover and kicker. They work pretty good for the longer time frames. If you are trading like starting within a couple of hours or within 1 week, within 1 month, these patterns can be the solution for you, where to find the opportunity, where to find the trade that will bring some profit at the end of the period. But if you trading for the shorter periods, like intraday or within a couple of hours, it can also be a couple of minutes. I'm sorry. If you see that on the chart, it can also mark some change, some reversal in the price, and can give you like the point and the reason to open the trade. So right now the market is pretty volatile. As you see, euro is falling to British pound, the asset that I was trading, and I have here like the 15 minutes time frame. Let's switch to several hours and to see if we can find some of the patterns or to find the good entrance point for to enter the trade and to make some money. I'm not planning to trade on European currency for the long term, especially on the British pound. Tomorrow, the Prime Minister of Great Britain may gonna speak on Brexit, so that can influence the British pound, European currency really dramatically. So what we're gonna do, we're gonna trade in front of that event, closer to it, in order for us to understand what is the attitude. And of course, if the trend, if the price changes in price will be long term, we can change the way, we can catch the wave and can open row of trades, each of which will bring the profit. Here I have like 4 hours time frame. As you see, the market is pretty volatile, and right now it's not so clear what to do. As right now, let's see what we've got on the British pound to American dollar, how high it is. So as you see, the price hasn't been on this level since the February. Well, basically, if not to count yesterday. So British pound is growing if to compare to other assets, if to compare to other currencies. On our platform also there is such commodity as gold to British pound, which will be pretty interesting to trade with tomorrow. As usually, gold is the sanctuary for traders, for investors who are not certain what will happen on the market next. So if the British pound gonna fall, the change and the wave that will appear on gold to British pound gonna be pretty dramatic, pretty high. So that's like an opportunity to enter and to make some extra money on that event. My trade on euro to British pound, I'm waiting for the next candle to appear because I'm not certain to enter the trade now. But definitely when I will see the reversal, I will enter. Because right now the price is, as you see, pretty low, and there should be a back move pretty soon. So probably even when this candle gonna expire. So I will wait. Also, if you are trading right now, if you like this asset to trade, you can watch for you can wait for the reversal. You can see if it's gonna happen and open the trade. So that's right now this pretty interesting situation here. So that's my advice for today for these assets. Right now it's not good to open, but within a couple of minutes it may be pretty interesting. That's the asset euro to British pound within 15 minutes time frame. Within 7 minutes that candle gonna be closed and we will see the next one. If this one will have a long trade, long shadow or long tail, it will be the signal that the trend, that the price will change, and we can open the trade for opposite. Okay, so today we spoke about 2 patterns of the candlestick. Dark cloud cover, which is bearish reversal, and kicker, which can be both for bullish and bearish. Both of these patterns work good with long body candles with the small tail or with a small shadow, and on both of them there should be a gap, at least small, but the bigger the gap, the stronger the signal is, the signal for reversal. Okay, so right now I want to thank you for your attention, and I want to, as usual, I want to hear your feedback about the candlestick patterns. I would like to know if something continues to be not clear, especially that relates to my traders, those who work with me. And also, if you have some ideas concerning the topic for the next webinar, some patterns, some indicators, I will be glad to hear that from you. I would be glad to hear the feedback. And you have my Skype, please write me. And I'm not saying goodbye to those who are working with me, because we're gonna continue, and I'm gonna hear that directly from you. And right now I'm saying goodbye. I'm inviting both my clients, my traders, to my trading webinars this Thursday. That's gonna be at 9 GMT or 11 GMT plus 3. So please come. We're gonna trade. We're gonna open at least 10 trades, and we will analyze the market and make some money. Thank you for your attention. Bye bye.